Today, we explore the exciting world of personal finance and investment. Today, we have a unique experiment lined up for you. We're going to take $1,000 and invest it in 10 different ways. Our goal? To find out which of these investments generates the most passive income over time. Number 1. Stock market investments. Investing in the stock market is our initial choice, where we plan to build a well-diversified portfolio of blue-chip stocks with a long-term perspective. Despite the stock market's inherent volatility, it has established itself as a reliable source of passive income over time, driven by both dividend payouts and capital appreciation. By allocating $100 to this investment, we aim to harness the power of compounding and gradual wealth accumulation. Recognizing that patience and a steadfast commitment to the long haul are essential components of successful stock market investing. Number 2. High-yield savings account. Investing $100 in a high-yield savings account is a prudent choice for our second investment. High-yield savings accounts are renowned for their safety and reliability, making them an excellent option for those seeking a stable source of interest income. These accounts typically offer interest rates that are notably higher than those of conventional savings accounts, making them an attractive choice for individuals looking to grow their savings. While the returns may not be as substantial as riskier investment options, the security and predictability they offer can't be overstated. Over time, we will diligently monitor the interest generated by this investment, steadily accumulating a modest yet reliable stream of earnings that can serve as a foundation for future financial goals. In an uncertain financial landscape, a high-yield savings account provides a reassuring anchor, ensuring that our hard-earned money remains safe and continues to work for us. Number 3. Dividend-paying stocks. Investing $100 in dividend-paying stocks can be a wise financial decision. These stocks are celebrated for their consistent payouts to shareholders, making them a reliable source of passive income. By choosing dividend stocks, you're not only aiming for capital appreciation, but also a steady stream of dividend payments. As you invest, it's crucial to monitor and analyze the dividends received, which can offer you regular financial support, allowing you to reinvest or cover daily expenses. Additionally, the potential for capital appreciation means that your initial $100 investment could grow over time. This dual benefit of income and potential growth makes dividend-paying stocks an attractive option for investors looking to secure their financial future. Whether you're a seasoned investor or just starting, this investment avenue offers stability and growth potential in one package. Number 4. Real estate investment trusts. Real estate investment trusts, REITs, present a compelling avenue for passive income generation in the world of investments. In this financial experiment, we've dedicated $100 to REITs, and here's why they are a favored choice among investors. Unlike traditional real estate investment, where managing properties can be demanding and time-consuming, REITs offer a hassle-free alternative. These trusts pool funds from multiple investors to invest in various real estate assets, spanning from residential properties to commercial buildings and even infrastructure projects. They distribute a substantial portion of their earnings as regular dividends, making them an attractive choice for income-focused investors. Number 5. Peer-to-peer lending. Investment strategy involves allocating $100 to peer-to-peer lending platforms. Peer-to-peer lending facilitates a direct connection between borrowers and lenders, enabling investors to earn interest income. While it presents a potentially appealing opportunity, it comes with higher inherent risks compared to more conventional investments. The allure of peer-to-peer lending lies in its potential for attractive returns. By participating in this financial ecosystem, investors can diversify their portfolios and explore the dynamic world of alternative lending. Number 6. Bonds. Bonds are a popular choice for conservative investors seeking a stable source of income. By allocating $100 to bonds, we can delve into their capacity to generate passive income. Bonds stand out for their ability to provide a reliable stream of interest payments, making them an attractive option for risk-averse individuals. Unlike more volatile investments like stocks, bonds typically exhibit lower risk due to their fixed interest rates and promise of principal repayment upon maturity. The allure of bonds lies in their ability to act as a financial safety net, shielding investors from the turbulence of the stock market. Our experiment with a modest investment in bonds will help us assess their performance in terms of income generation, offering valuable insights into the potential of these financial instruments for those who prioritize stability and consistent returns in their investment portfolios. Number 7. Rental property. Investing $100 in a rental property can be a promising venture, potentially yielding a steady stream of passive income. However, it's crucial to acknowledge the substantial responsibilities that come with managing a rental property. Unlike some other investments, this endeavor is often more hands-on. While rental income can provide financial stability, it requires a significant investment of time and effort. Landlords are responsible for maintaining the property, addressing tenant concerns, and ensuring that the property complies with local laws and regulations. Successful rental property management also involves finding reliable tenants, handling rent collection, and budgeting for maintenance and unexpected expenses. Number 8. Dividend ETFs. Allocating $100 to dividend exchange-traded funds, ETFs, is a strategic move for investors seeking income through a diversified portfolio. Dividend ETFs pool together a collection of dividend-paying stocks ranging across various sectors and industries, providing investors with a broad and balanced exposure. By investing in these ETFs, individuals can gain access to a wide spectrum of dividend stocks, effectively spreading risk and minimizing the impact of individual stock fluctuations. This diversification enhances the stability and reliability of income streams, making dividend ETFs an attractive choice for income-oriented investors. Over time, these funds have demonstrated their potential to offer consistent and growing returns, making them a valuable addition to a long-term investment strategy. Number 9. Start a side business. Investing in a side business, as our 9th strategy suggests, is an innovative path to financial growth with a modest initial investment of $100. It embodies the entrepreneurial spirit, offering the potential for passive income over time. While it promises an avenue for income augmentation, it's essential to recognize that its success might necessitate some active involvement, especially in the initial stages. A side business can take various forms, from e-commerce ventures to freelance services, and even monetizing a passion or hobby. This diversification can serve as a safety net, safeguarding against economic uncertainties or providing supplementary funds for personal goals. Number 10. Cryptocurrency. Dedicating $100 to investing in cryptocurrency, specifically in this case, is a foray into the intriguing world of digital assets. Over recent years, cryptocurrencies have garnered significant attention, sparking both excitement and skepticism. The objective behind this investment is to explore whether they can serve as a source of passive income. Cryptocurrencies, known for their potential to deliver substantial returns, come with a caveat: high volatility. Therefore, this venture goes beyond mere financial gain. It also entails a meticulous tracking of associated risks. Please like, share, and subscribe to our channel. If you have any questions or want us to explore other investment options in future videos, please leave your suggestions in the comments below. Thanks for joining us today, and we'll see you in the next video.